how will these overnight cues impact our own markets? We have our research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. But first up, let's talk about all the stocks that are in focus. Abhishek Kothari is joining us with that list. Abhishek.
Well, to begin with, GR Infra Projects Limited is in focus because one of their SPV has seen a recent incident of under construction pillar sinking that occurred on 23rd of July. This was in one of the project location in Kishanganj over the Meki River. Titagarh Rail System, they have got a letter of agreement for projects worth about rupees 857 crore from Gujarat Metro Rail Corporation. Ramco Cement is in focus. They have commissions line 3 at their RR Nagar of 3,000 tons per day capacity of clinkerization. So this is the first integrated cement line commissioned in last 15 years in the south of Tamil Nadu. Gland Pharma is in focus because US FDA issues 1483 observation for company's Hyderabad's facility. Now US FDA inspected the facility from June 15 to 27 for 7 products and GMP. SDFC Limited in trade yesterday bought about 1.5 crore shares of SDFC Life at a price of 667.1 per share. So Shalby is in focus because they have signed agreement with Divine Super Speciality Hospital Ranchi to establish an FOSM hospital. So FOSM is franchisee owned, shall be managed. Back to you.
Okay, all right. Those are all the stocks in focus. Let's talk about the market cues now. Rima is joining us with that update. Rima.
Thanks so much for that. So yesterday, towards the end of market close, we had a big market zooming up. The Nifty conquered that 18,800 mark, courtesy the HDFC banking twins. So if you pull up the HDFC banks and the kind of delivery volumes we've seen, in HDFC Bank, it was nearly 1,400 crore rupees. In HDFC Limited, it was 1,500 crore rupees. It was a combination of the merger news and the fact that it was a Fin Nifty expiry. Today, we've got the June series expiry, and the global cues are very positive. So Wall Street had a stellar rally. Technology stocks have rebounded with the Nasdaq ending with a gain of 1.65%. Asian markets are higher this morning. Brent crude prices have eased. If you remember, at the beginning of the week, Brent crude prices were at $74.50 per barrel, and now we're down to $72.50 per barrel. In terms of flows, the DII selling pretty much netted the FI buying, so about 2,000 crore plus or minus, but the gross volumes were also impacted on account of the Sapphire Foods block deal. In other important news, the Bank Nifty weekly expiry will remain on Thursday. This was a communication sent by the NSE and BSE. So the NSE has withdrawn their earlier circular, which indicated that the Nifty Bank weekly expiry would be pushed to Friday. Now, as before, it will continue to remain on Thursday. And in another important cue for today, SEBI board meet today. It's in the evening where they will discuss the proposed total expense ratio changes. So this is something the mutual fund industry will be tracking very closely. Back to you.
Oh, yes, that would be a big change and very important one to track. So that is an important cue. But finally, let me get to Nigel joining in with all the cues from the F&O space. Hey, Nigel.
Well, morning. Yesterday, the bulls were looking for a cue, and the HDFC twins, they provided just that. Both of them, they surged in the last 90 minutes of trade. And that's what led the Nifty higher and also the Nifty Financial Services Index higher. Because keep in mind, that's the one that has a high weightage of HDFC Limited as well. HDFC Bank, we know it's already part of the Nifty Bank, but HDFC Limited as well did surge up and trade. The other point is the India VIX. Well, it ended at its multi-year lows in yesterday's trading session, ended sub 11 odd. And as we know, maybe it's getting a little bit complacent, but that's the lowest we've seen in many, many years. What do the FIs do? Well, the cues coming in from there are very, very bullish and maybe a little bit too bullish. So they added closer on 7 longs for every 1 short position on index futures. And even on stock futures, they added closer on 17,000 long contracts, and there was some big short covering that we saw. The call writers, they got taken to the cleaners yesterday. 18,700 call, 18,800 call, big unwinding being seen out there. The positioning was such that we don't go past that 18,800 odd mark. However, we did. And that's why we did see big unwinding. Even on the Nifty Bank, there was a fair bit of writing added on that 43,800 call. That as well did come in for some big unwinding in yesterday's trading session. So going by the data points you have, well, you'll have to take that risk. You'll have to buy the Nifty Bank, expect a good expiry for the bulls today. And, you'll have to trail your stop losses, both on the Nifty, the 20 DMA comes up for you on the screen, and on the Nifty Bank as well. We have supports at around the 20 and then the 50 DMA. And we know from the 50 DMA, it's bounced numerous times. SGX Nifty, well, it's indicating we're going to start off closer to around the all-time highs. I think today we get there. Back to you.
Okay, all-time high is the level that has been watched for with a lot of attention. So we'll watch out for that. But time for a short break now. When we return, India's current account deficit for the January to March quarter comes in at 0.2% of GDP versus estimates of a surplus of 0.5%. More on that when we return.